Welcome back to Cryptos Are Us. I am George. I gotta say it. I just have to say it. Michael Saylor is a freaking genius. Yes, that's right. Michael Saylor is pure genius. Now, I've been critical of him recently. I know that he went all in on Bitcoin, and a lot of people were cheering about that move, but I was critical because I felt like he was risking a little bit too much. Not only did he take his entire reserve currency, basically all the cash he had on hand from MicroStrategy, 475 million, he put it all into Bitcoin, but then he raised debt, 600 million, 650 million more to buy Bitcoin. So I felt like he was just risking too much until now. And that's because I came across a recent interview he conducted on this other channel called Hyperchange. And wow, that interview blew my mind. It really did, because it shows how smart Michael Saylor really is. He's not just a businessman. Obviously, he knows business. He's running a $1 billion plus publicly traded company, one of the top business intelligence companies in the world. So yes, obviously he's a good businessman, but if you listen to him, he knows money. He knows monetary and fiscal policy really well. And he knows about technology. He knows what Bitcoin brings to the table, right? Basically, it's a better form of gold. He knows that adoption is coming, and he makes so many intelligent points in this interview. It really blew my mind. It really did. This is one interview you don't want to miss. If you don't watch any of his other interviews, this is the one to watch. So in this video, I'm going to go through the best parts of this interview because it is quite long, over 40 minutes. I'm going to play clips for you guys and react to it because what he says is just really mind-blowing, and it really shows that Michael Saylor knows what he's doing, and he is a genius. All right, let's get started. Okay, let's get started. So this interview was conducted on Hyperchange. And look at the title. Pretty interesting. That actually was what drew my eyes to this interview. Should Tesla convert its cash to Bitcoin? Now, I don't think this question was actually asked during this interview, but it's interesting to think about. It definitely is. Seeing how MicroStrategy did it, they went all in, right? Will other companies follow? And I could see someone like Elon actually making this same move. But anyways, let's get started. At the beginning, the host, I believe his name is Gali, and I apologize if I pronounced that wrong. But Gali asked Michael, like, hey, tell us your background. What is your background? What is MicroStrategy? And why you made this decision to basically put all of your cash reserves into Bitcoin.
In 1989, I took it public in 1998. We sell business intelligence software to big banks, governments, retailers, organizations everywhere on earth. About 27 different subsidiaries. And, we grow like, it's stable, or we grow 5% a year. It's not like a 20, 40, 50% hyper growth company at this point. It's fairly mature, well run. We generate a lot of cash flow. And when we came into the year 2020, we had like $600 million in cash. And we were generating some cash, and we were saving our money for a rainy day. And we tried to be conservative. We bought back hundreds of millions of dollars of our stock, and we were investing the rest in short-term treasuries. And I remember when short-term treasuries used to yield 5%, and we would have been getting 30, 40 million a year. And it felt like, okay, responsible. And then
pretty amazing that over the last 2 decades, he basically saved up $600 million of cash. That's quite a bit, right? Yeah, I just want to point that out right away. And also he was talking about how before he could gain interest on that 600 million, right? But now he can't. So think about it. To earn 5% interest, the yield he was talking about is 600 million. Yeah, that's $30 million per year. That would be a lot already. But unfortunately, that stopped, right? So let's continue.
The Fed just systematically cranked down the interest rates until it got to zero. And then we realized that, well, the cash generates nothing. And then the investors successfully told us they didn't value the cash as anything. Their view was it's just a lump of lead on the balance sheet. And the company was, it's almost like a liability. Like your cash is a liability. You either need to buy the stock back or give it to us as a dividend to get any credit for it. So we got to March and we thought, well, we have a lot of treasury cash for a rainy day. And then the rainy day came and it was pandemic. And when the pandemic hit, we actually found that everybody wanted the software. The software business is better than ever because we're just selling software to big enterprises and the like. But our costs decreased because now we couldn't do marketing events and we couldn't travel, and we couldn't stay in hotels, and we couldn't go on airlines. And so the company went from having a lot of cash and generating a bit of cash to having a lot of cash and generating a lot of cash. And simultaneously, we saw all these financial assets have a V-shaped recovery. And then we saw Main Street have a K-shaped recovery, the famous K-shaped recovery where restaurants and airlines and hotels and amusement parks and theaters don't seem to be coming back. And yet all of these stocks and bonds are shooting through the roof. So on one hand, I realized I have a lot of cash. On the other hand, I realized I was going to generate a lot of cash. And then I realized it was worthless.
You would figure as a company with 600 million cash on hand would be a good thing, right? Like he said, you can save for a rainy day and do a lot with that cash. But according to Wall Street, according to investors, having that cash is a liability because they see it as just like a lump just sitting there, right? They view it as cash that you need to invest, either to give back as dividends or to do a stock buyback or to invest with, right? So think about that. Think about having 600 million of cash in your bank account and that being a negative thing. I don't think any of us can imagine that, but that's exactly what Michael Saylor went through.
And I realized it was worthless because the monetary expansion rate went from about 5% a year to 15% a year. And we actually expanded the money supply by 24% a year in the US this year. So everybody knows about money printing and all the stimulus. Well, I went from not caring to thinking, well, we'll save the cash, get a yield on it, and figure out what to do with it, to realizing that we're going to lose about 15% of our purchasing power every year for the next 4 to 5 years. And so a block of 500 million in cash looks like a melting ice cube. And it felt like highly certain that we were going to lose half of that money in 36 to 48 months if we did nothing. And so we arrived at the Bitcoin investment when we realized that cash is a liability, not an asset. We have to invest in something that'll beat the cost of capital. The cost of capital is the rate of M2 monetary expansion. It's the rate at which the currency is losing purchasing power. And so if the currency is losing purchasing power at 15% a year, then we're all going to lose half of our wealth in 36 to 48 months.
Very interesting statement that the monetary policy, basically, the M2 monetary policy, basically your purchasing power is anticipated to be decreasing at 15% per year, right? And that stacks up, which is why he said in 36 to 48 months, basically, you're losing half of your purchasing power. So think about that. In his position with 600 million, I think he changed it to 500 million. At the beginning, he says 600, now it's 500 million. But he's faced with this dilemma. He has all this cash and it's going to be decreasing. Basically, it's getting worthless by 15% per year. And he's about to lose half of that if he just sits on it for about 3 to 4 years, right? That's pretty mind-boggling, right? We don't really see it that way. And we'll get to what his answer, because I know a lot of people are thinking, well, if you look at inflation rate in the US, it's only like 2 or 3%. Where's this 15% coming from, right? Listen to what he says.
Yeah, and then I wanted to just dive a little deeper here. So why aren't we seeing inflation of prices go up that much? Maybe we are in equity assets, but I'm curious of like, a lot of people would be like, okay, well, why is there no inflation? But you're saying pricing power goes down 15%. Can you help us break that down a little?
Yeah, because inflation is it's a defective idea. there is inflation. There's inflation in everything that you want to buy. It's just not tracked by the Fed. For example, Hampton's real estate is up 50% in 16 weeks. How is it not inflation when the beach house you wanted in the Hamptons is 40% or 50% more expensive in 3 months? And there's inflation in assets. There's inflation in bonds. There's inflation in stocks. There's inflation in real estate. There's inflation in gold. There's inflation in scarce art. There's inflation in everything scarce. There's inflation in, by the way, the inflation measure that the central bank tracks is a market basket of consumer goods and services that do not include the highly volatile food and energy. By the way, they don't include food, energy, and assets. So you tell me, in what universe do you live in that you can live without food, energy, or assets? If you want to watch streaming Netflix or YouTube videos for the rest of your life, then there's no inflation.
But it's interesting. I did not know that they're not counting food, and food prices have been going up astronomically if you haven't been paying attention. Also energy, right? Besides gas, which has tanked because no one's really driving or flying or taking cruises, but still energy costs have been going up, right? And assets, of course, have been going up. Assets like Bitcoin, which has been going up, right? So that's powerful. I didn't know that. Maybe some of you guys did, but that kind of shows you that inflation is not just 2%. It's 2% because they're discounting all these volatile things that they don't want to really measure, but really everything is going up in price. All right, so I'm going to skip forward a little bit because this interview is very long, but I want to skip over to the point where he's basically saying that Bitcoin is basically like synthetic gold. It's like the best part of gold, and it's almost like the Facebook of monetary systems, right? He kind of explains it. He explains it better than I do, and just listen to it. It makes a whole lot of sense.
And if you basically designed a crypto network that was 21 million gold coins, and you couldn't produce any more, and then you could audit it every 10 minutes, and then if you convinced $350 billion worth of money to buy into that network, you would have Bitcoin. So Bitcoin, in essence, becomes the first digital monetary network. It's the Facebook of money, because it's, on one hand, it's a synthetic safe haven asset. It's like pharmaceutical grade gold. It's like all the gold, none of the hangover, all the good parts of gold, but none of the bad problems with gold. And it's sitting on a big tech network like Facebook or Google, and you can plug into it. Like, no one's ever going to plug gold into an iPhone. You're not going to like punch a button and buy 10 bars of gold on the iPhone. But PayPal and Square have plugged Bitcoin into the iPhone. So Bitcoin is programmable synthetic gold. And if you're trying to find something that is scarce that's going to float on the pool of liquidity as the Federal Reserve and the EU Central Bank print more money, then Bitcoin is that something, because you can't make any more of it. You can program it. And then, by the way, the answer is a crypto asset network. The issue is, why not one of the other 10,000? Will it be
Okay, before I get to that next part where he explains why you want to choose Bitcoin over altcoins, again, that's a powerful thing that he said. He explained it perfectly, right? Bitcoin is the best parts of gold. Basically, it's a store of value, and it's a non-correlating store of value that's not controlled by any entity. So it's gold, but it's better, right? And it's also a network. It's a network that people and companies can plug into, right? Like PayPal, Square, and others that are building upon it. You can't do that with gold. Gold is done. It's not technology. And Bitcoin is, right? So that's a powerful thing. Bitcoin is the best parts of gold, but it's better. It's made better, and it is better. That is why it's growing faster, and it will probably, and And one day it can surpass gold. It seems improbable. It seems unlikely at this point, but who knows? But his next part is why Bitcoin over altcoins?
Copied, will it be banned, or will it be hacked? And Bitcoin is at the point where it hasn't been hacked in 12 years. It's been copied 10,000 times, but it's the winner. So you pick, it's like not Friendster, it's not MySpace, it's not Yahoo or AOL, it's the Facebook or the Google. You got to pick the winner. Once something is hundreds of billions of dollars and 20 times bigger than the next like kind thing, then it's the winner. And it's clear it's not going to be banned. It's built into PayPal and Square. There's a senator, there's a congressional caucus. It's been adopted and regularized, and it's been adopted by the SEC and the IRS as property. So you've got crypto asset gold network for the 21st century as a store of value. That's why we adopted it.
Pretty interesting, right? I think we all know that already. First movers advantage. Bitcoin obviously much bigger, a lot more money into it. There's more focus on it, and it's not going to be shut down anytime soon because you have big corporations that's adopting it, congressmen, and all these other things, even the IRS, they all recognize it, right? So it's not going to be shut down. So that's the reason why he believes in Bitcoin over all these other altcoins. The next point is awesome. Basically, he talks about how having Bitcoin in a mobile wallet is basically a bank account that appreciates 100% tax-free year over year over year. It's an interesting way to think about it, but it's true. So listen to this next.
If I put a bank account on a mobile phone like cash, then I've got free checking, magic bank account. If I plug it into Bitcoin, I have a savings account in cyberspace run by incorruptible software that yields 100% interest tax-free. Who doesn't want that? Like for the last decade, Bitcoin has been appreciating 100% versus the dollar. And if you just put the money into the Bitcoin savings account, and you don't sell it, you're basically getting it to appreciate tax-free. So how many banks will give you 100% tax-free savings accounts? Not many, right? So pretty compelling idea, right? And the other observation is they sold like $1.6 billion worth of Bitcoin in the third quarter, and that's up 100% over the second quarter. And that's up 1,100%. So when something's growing 1,000% year over year and it's doubling every quarter, that's the world's way of giving you a wake-up call, telling you this is high growth. And by the way, why wouldn't you? I'm giving you 100% tax-free savings account. Your choice is keep it in cash, get 0% interest, and the wealth is going to be cut in half in 36 months. So it's not a hard decision once you understand what's going on. It's utterly compelling.
Basically, if you have your own mobile wallet or any kind of wallet, right? Basically, you're acting as your own bank. You have your own savings account. And the fact that, if you have money in a traditional savings account or checking account, you basically make 0 interest right now, right? And with your purchasing power decreasing by 15% every year, you're losing about half in about 3 to 4 years, right? So why would you not put it into something that actually appreciates 100% year over year over year over year, right? That is basically what Bitcoin has been doing for quite some time. All right, so I'm gonna skip a lot of this interview. It's dragging on a little bit, right? I'm gonna get to the part where he talks about Apple and if Apple adopts Bitcoin.
Square's moved. Because Square moved, PayPal's got to adopt it. Otherwise, everybody shifts their accounts to Square. I mean, who wants a savings account that yields nothing when they could get 100%? So Square pushed PayPal. Square and PayPal are going to force Apple to move. And if Apple were to build a crypto wallet into the secure element of the iPhone and really support it with integration to Apple Pay in a nice native fashion, and if they were to adopt Bitcoin on their balance sheet and start to buy some Bitcoin, they would generate $100 billion in shareholder value in 12 months. I mean, you want to make $100 billion? It's a very simple thing. Build it into a billion phones and then buy a few billion worth of it. What do you think happens to Bitcoin? If Apple buys $10 billion of Bitcoin, what do you think happens to the Bitcoin price? So the point is, there's so many ways to make money, right? Because if Apple did it, everybody else would have to do it too, right? And a billion people will be using the iPhone. If I use my iPhone as my hardware wallet, if it's the go-to hardware wallet for moving Bitcoin around, then you're going to pry it from my cold dead fingers. Square's done a great job. They basically plug Bitcoin into Square, and PayPal's plugged Bitcoin into PayPal. Once you've made that commitment, they're going to pry it from your fingers, white knuckled. No one's going to let go, because who wants to give up their money? It's one thing, think about how loyal we are to Apple because we got our photos on it, or our messages on it, or our movies on it. What are you more loyal to, all the money you own or your photos?
So if Apple really builds out a hardware wallet into iPhones and then commits, let's say $10 billion to Bitcoin, right, as a reserve, and who knows, maybe Apple introduces crypto trading and they buy even more, that's going to be a huge thing. If you thought PayPal was huge getting into Bitcoin, imagine if Apple follows suit, right? And Apple has so much cash. They're worth over $2 trillion, but they have like $300 billion of cash sitting around, right? So if you thought 500 million was a lot of cash to sit around, think about Apple that has hundreds of billions. They really have enough cash to basically buy out Bitcoin, although that will never happen. But that's how much cash. For them to put in 10%, 5%, whatever, is a huge amount. So I think Michael's right. If you want to watch the full interview, then make sure you head over to Hyperchange. I have the URL in the description of this video. This is a terrific interview. It really opened my eyes. It really makes me understand why Michael did what he did, and he wasn't foolish about it. He wasn't risking it. In fact, by making this move in terms of getting more debt to buy Bitcoin and also putting all of his reserve funds into Bitcoin, that's actually less risky and a smarter move. So this was a fantastic interview. I really enjoyed it, and I'm really looking forward to his next moves. So what do you guys think about Michael Saylor and MicroStrategy and their move to move all their cash into Bitcoin? Should other companies follow, like Tesla? Should Tesla follow in the footsteps of MicroStrategy? Leave your thoughts below. So thanks for watching. Hit the like and subscribe to the channel if you are new, and stay tuned for my next video. But while you're waiting, check out these two other videos if you haven't already.